Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX walkthrough. What I'm going to do tonight, as always, is walk through the latest technical report at DailyFX.com and identify support and resistance levels that we can base trades on. The presentation is located directly beneath this video. Enjoy the show.
So here are the four pairs that I will be discussing this evening: the Kiwi, Aussie, Euro, and the dollar yen. So let's go ahead and pull up the charts. The first chart is the Kiwi dollar. This is an hourly chart, and this is the same channel that I've been using, I would say, for the past 7 or 8 reports now. And I was mentioning in yesterday's report how we had that final spillover. It appeared to be a final spillover, and then we might wait for a downside breakout, which would be confirmed with a close beneath the lower support line of the channel. Now that's what did occur, but then that turned out to be a false breakout as well, and now prices are in the middle of the channel once again. So with all that being said, at the end of the day, this channel is still intact as of right now. Nothing has changed in my opinion. I believe there's going to be a downside resolution to this pattern. Moving forward here, I would favor a short trade here with a stop back above the upper resistance line. Try to get an entry close enough to that line where it would justify the risk to reward. But again, moving forward, I expect a downside resolution to this pattern to take out this low here. And we can see, and this is a common thing, we can see the symmetrical nature of this pattern. We had a spillover on top, that's roughly about 30 pips, and then we had a spillover on bottom, that's roughly about 30 pips as well. So that's what we can keep an eye on moving forward. The next chart is the Aussie dollar. Not much has changed here. I'm still just waiting for prices to come down to this longer term support line on the daily chart. The next chart is the euro dollar, and not much has changed here either, although I will say that the low near that 133 figure could be significant. Just looking at this chart, you can argue that this is an A, B, C correction of the rally from just near that 125 figure to near the 147 figure. So assuming that the correction is complete, we can use this simple support line. We might look to get an entry just above that line with a stop 50 pips or so beneath it. My confidence in this particular trade idea is not very high, but support lines on daily charts are one of my, and resistance lines for that matter, one of my favorite indicators. Very simple, very straightforward. So I would definitely, I'm personally waiting for prices to come down to this support line where I would look to enter. The last chart is the dollar yen, and prices have come down. Let me get the low print here, testing the opposite side of the previous resistance line, which I am now expecting to act as support. That's 90.84 is the low print. I like that low, although the resistance line, the previous resistance line, is a little beneath that level. So if we can get an entry anywhere below that 91 figure, maybe about 90.95 or even 90.90, I would like that trade with a stop 50 pips or so beneath that level. But again, keep in mind that prices did come down to that line and did rebound just above the line. So it's not as clean as I would like it to be, but that's something we can look for over the next 24 to 48 hours. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.